I'm Coach Alden Porter, and this is Profit Architect TV. If I asked you whether your business is financially healthy, could you answer with 5 numbers? Not your bank balance, not how busy you are. 5 numbers that tell you what is really happening underneath the business. Many owners know their sales, they may even know what is in the checking account today. But when I ask about gross margin, overhead, average transaction, or operating profit, the answers often become less certain. I'm Coach Alden Porter, founder of Alden Executive Advisors. In this episode, I'm going to show you 5 numbers every business owner should know and why each one matters. Let's use a hypothetical company called Summit Home Services. It is an established small business with customers, employees, recurring expenses, and $600,000 in annual revenue. Number 1 is revenue. Revenue is the total amount the business brings in from sales before we subtract the costs required to produce those sales. Summit Home Services completes about 1,200 customer transactions a year with an average transaction of $500. 1,200 times $500 equals $600,000 in annual revenue. Revenue is important, but revenue by itself does not tell you whether the business is healthy. A company can produce impressive sales and still leave very little money for the owner. Number 2 is gross profit and gross margin. To get there, we first subtract the direct costs associated with delivering the company's products or services. In our example, Summit Home Services has $360,000 in direct costs. Those costs include labor, materials, subcontractors, fulfillment, and other expenses directly tied to doing the work. $600,000 of revenue minus $360,000 of direct costs leaves $240,000 of gross profit. That means the company's gross margin is 40%. For every dollar Summit sells, 40 cents remains after paying the direct costs required to deliver the work. Gross margin matters because it tells you how much financial room the business has to pay overhead and still produce profit. If the margin is too thin, more sales can simply create more work. Watch what happens if direct costs rise from $360,000 to $390,000, while revenue stays at $600,000. Gross profit falls to $210,000. The gross margin falls from 40% to 35%. That 5-point margin decline removes $30,000 before we've changed rent, insurance, software, administration, or any other overhead expense. Number 3 is operating overhead. These are the costs required to keep the business running that are not directly tied to one specific customer transaction. For Summit Home Services, overhead includes administration, rent, insurance, software, marketing, vehicles, professional services, office expenses, and other costs of operating the company. In our original example, annual overhead is $180,000. That represents 30% of the company's $600,000 in revenue. Now the financial picture becomes clearer. $240,000 of gross profit minus $180,000 of overhead leaves $60,000. Number 4 is average transaction value. This tells you, on average, how much revenue the business generates each time a customer buys. Summit generates $600,000 from 1,200 transactions. Divide $600,000 by 1,200, and the average transaction is $500. This number matters because growth does not always require finding hundreds of new customers. Sometimes a business can grow by helping existing customers buy a more complete solution. If the company kept the same 1,200 transactions but increased the average transaction from $500 to $525, annual revenue would rise from $600,000 to $630,000. That improvement might come from better bundling, appropriate upselling, cross-selling, an additional service, or a responsible price adjustment. The right method depends on the business and the customer. Number 5 is operating profit. This is what remains in our simplified example after direct costs and operating overhead have been paid. Summit's original numbers were $600,000 in revenue, $240,000 in gross profit, $180,000 in overhead, and $60,000 in operating profit. $60,000 of profit on $600,000 of revenue is a 10% operating profit margin. In simple terms, 10 cents of every sales dollar reaches the operating profit line. Now let's see why knowing all 5 numbers matters. Imagine another company with exactly the same $600,000 in revenue. From the outside, the two businesses might appear identical. But suppose the second company has a 45% gross margin. That produces $270,000 in gross profit. And suppose its overhead is 28% of revenue, or $168,000. That leaves approximately $102,000 in operating profit. Same $600,000 in revenue. One company produces $60,000 in operating profit. The other produces $102,000. The revenue number did not change. The financial architecture underneath the revenue changed. That is why I do not want business owners judging performance by sales alone. These figures are hypothetical and simplified for education. Your accounting structure, taxes, owner compensation, debt, depreciation, cash flow, and other factors can change how your actual financial statements should be interpreted. Put the 5 numbers together on one simple dashboard. Revenue, gross margin, operating overhead, average transaction value, and operating profit. Revenue answers, how much did we sell? Gross margin answers, how much is left after we deliver what we sold? Operating overhead answers, what does it cost to keep the business running? Average transaction answers, how much is each customer purchase worth? Operating profit answers the question owners ultimately care about. After running the business, how much of the revenue actually reaches the bottom line? I recommend reviewing these numbers at least monthly and comparing them with prior months and prior years. A single number is useful. A trend is far more useful. If revenue is rising but profit is falling, ask why. If gross margin is shrinking, find the cause. If overhead is growing faster than revenue, investigate it. If average transaction is stagnant, look for appropriate ways to improve value. You do not need a finance degree to start. You need accurate numbers, a regular habit of reviewing them, and the willingness to ask what each number is telling you. Then take the next step. Go to alden3.com simulator app and use the Profit Acceleration Simulator. Enter your own numbers and explore what modest improvements could potentially mean for your business. I'm Coach Alden Porter, and this is Profit Architect TV. Know your numbers, understand what they are telling you, and let's find the profit.